I think we'll dive right into it, right? My first question to you is, should global investing be a part of every Indian investor's portfolio?
See, I have around 20-25% of my portfolio in global stocks
Mhm.
for the last 10 years or so. So I'm a believer of sensible investing. I don't start by thinking, is it global? Is it India? Is it US? Is it Europe? Because these are labels.
Right.
And in fact, the reason why global investing is being discussed right now is many times for the wrong reasons. Because in the last 2 years, global stocks have done well and Indian stocks have not done well. So the reason of thinking about global investing
Mm.
is inherently not very correct.
Right.
But it is still an important part. Um, uh, and it also depends on, who are you as an investor and what is your area of competence to understand. So if you understand broadly investing and have reasonable amount of money,
Mhm.
you want to build a diversified portfolio, global investing definitely adds value to it. Number one. Number two, let me also clarify that when you invest globally in companies and stocks, you are end of the day buying stocks,
Correct.
and stocks have fluctuation. Stocks
Absolutely.
rise and stocks fall. So there are even global stocks. So you cannot take away the volatility of stock market by doing global investing if that is the expectation. Because in last 2 years, global stocks have moved up almost one way. Many investors feel that this is a safer way of investing. But the truth is, if you look at standard deviation of any global benchmark, S&P
Mm.
500 or Nasdaq or MSCI World, it is very similar to the standard deviation of Nifty 500. So volatility of stocks is equal to volatility of stocks anywhere on earth.
Correct.
So being mindful of that, once you are aware of that reality, that these are going to be as volatile as Indian stocks, but the difference could be that if the portfolio is well constructed, either
Mm.
by the investor himself or by taking inputs from you, by mixing it reasonably well, what happens is there are certain business models who have a business cycle or a profit cycle which is slightly different than the business models of companies in India.
Okay.
And then there are different, many of these businesses are valued very differently. So there are phases when one market is cheap and the other market is expensive.
Mm.
One market is in favor and one is out of favor. So when you mix a portfolio like this, it allows you to still over a long period of time earn reasonable compounding on your capital, but with slightly lesser volatility. Aggregate portfolio can have lower volatility without compromising on returns over a full cycle.
Mm.
But intermittently, global investing can also give you pain. So let's say, in the decade of 2000 to 2010,
Mm.
US stocks earned almost zero returns, and Indian stocks and emerging market stocks went through the roof.
Really well, yeah.
You would have wondered, why should you do global investing when you're making all the money here? And hence, in 2000, 8, 9, 10 era, more money got invested here. Nobody even thought of global investing.
Correct.
And in that decade, US stocks made all the money, or most of the money. So there will be cycles.
Mm.
You need to be mindful of that. And what I want to clarify always is that do not chase an asset class just because the last 3 years are good. Chase it only if it fits in your overall portfolio
Correct.
to either achieve for the same risk higher returns
Mm.
or for the same return lower risk. And I think sensibly curated overall portfolios, including Indian and global portfolios, can allow you to achieve this objective.
Very interesting point, Sharon. And when you said that allocation to a larger extent needs to be mindful, right? Not just because it's the flavor of the week or the year. Say, let's take a quick example, right? We saw metals and semiconductors do really well over the last, I'd say, 18 months. And a lot of money has, or a lot of investors have been chasing these themes, looking at, let's say, short term returns. This behavior becomes a challenge even when we look at global markets.
Yeah.
We've seen markets in Latin America doing well. We've seen markets in Asia doing really well. And when an everyday investor on the news hears that, okay, I've been sitting in the red for, let's say, 18 or sideways for 18 24 months, and everybody else is having a party, why am I missing out? So my follow up question to you would be, let's say somebody understands how much they should allocate to global investing. What I would say available venues do they have to sort of take the benefit of global investing?
So see, firstly, this feeling of missing out or fear of missing out is a very big emotional problem in the journey of being a good investor.
Hmm.
So this is like saying that, you are citizen of a country or India. and somebody out there is studying politics or international history or international relationships, and you are studying physics and chemistry and engineering here in India. Just because somebody else is doing that and has done very well in that year, you say, okay, I'll drop this and then start studying that. By the time you go there, they start doing that.
Right.
So just be mindful again that it should never be because somebody else is doing it and is having a party and I'm not having a party. Because parties keep, cyclically fluctuating.
Right.
And and hence a better approach. My first approach of investing would be a single fund, which allows you to invest in companies of the world, including India, which are good companies to invest and are available at reasonable price. In global investing, if you buy bad companies, you lose money. If you buy good companies at very high valuations, you still lose money. How many of you would know that between 2000 to 2014, Microsoft gives you returns? Or Amazon, which is amongst the top 5 market cap companies today,
Right.
in its 30-year history has had a 70-80% fall in price 3 times. Now, if you had done global investing and if the stock had fallen 70% in between, maybe 30-40% you would have got out.
Correct.
Never come back. So from far today, it looks like these companies have become trillion-dollar companies and we missed out on it. But it takes nerves of steel and real understanding that these things happen.
Correct.
Ironically, most of us don't appreciate falls in prices and corrections. We don't know that they will also happen. And the real moment of truth is when they will happen. Will this romance of global investing remain or go away? So the first principle is not to think of global investing or domestic investing, is to think of what are good investing principles. The right question is not कि global या India. The right question is invest कैसे करना चाहिए.
Correct.
Invest कैसे करना चाहिए? अच्छी कंपनी, अच्छा भाव और अच्छा time horizon. These are 3 important ingredients for being successful over a long period of time. 1-2 साल में you make money also, but over 10 years if you make mediocre returns, it won't help your compounding.
Correct.
So, Morgan Housel का एक statement है, which is very important, that we should earn reasonable returns for unreasonable periods of time. Not that we should earn unreasonable returns for short periods of time. So now to achieve that objective, building a portfolio thoughtfully around principles of good companies and good price is very important. So like I said, Microsoft was a great company, but if you bought it at 80-90 PE multiple, for 20 years it gave mediocre returns. Coke was a great company and is a great brand even today. But from 1990s till today, it has underperformed the S&P. It has not even beaten an index. Great company bought at very high price. So if you are doing any investing, but if you're not mindful of these, what can go wrong, even by investing in a great market or a great company, you will not achieve any outcome. So now coming to how do I invest? My first choice is, I invest in a fund of ours, which has a mandate to invest in Indian stocks and global stocks. But another important mandate is it respects valuations. So broadly good companies, but never overpay. So it will miss out the last leg of the semiconductor value because great companies, but price very
Price is too
expensive.
high.
But it would have captured the early phase of that move.
Right.
And at the same time, great companies, when they turn down because of valuation de-rating, it will avoid those downsides. So this is, so my first choice is any company which invests in a basket of Indian and global companies together. Because when you have a mixed portfolio, what happens is, rebalancing of weights or, trimming profits and buying something else is tax efficient.
Correct.
And as an investor, one thing that I've learned, I've been an investor since 98 now, 28 years that I've been an investor. If I know that I don't need money for the next 10, 15, 20 years, that money I will invest in equity funds. Then I don't want to keep getting in and getting out.
Correct.
I'm very patient with whichever fund I'm invested in. I'm very patient with that fund manager. I'm patient with the cycles of performance. Most of us get very edgy if in 1 year or 2 years the portfolio doesn't do well. The last 2 years, many funds that I've invested in have done 3%, 4% return, less than savings account. But I don't get worried that 4% मिला, let me get out.
Correct. होना भी नहीं चाहिए और I think
होता है because human behavior ऐसा है और हम लोग we are not born with genes of an investor.
correct.
The template of investing is very different than the template of living a human life.
Fair.
So human behavior is wired in such a way that it makes us a bad investor. So you have to completely do the opposite of what has made us successful in life.
Correct.
To be successful in investing. So first choice is funds which can do India and global together. Second choice could be funds which do only global, but then you need to get the cycle right. So if you go and buy a China fund after 3 year returns are very high, you will lose money. If you go and buy a Taiwan fund after it has gone up 400%,
Mm.
very likely you might not make money. If you go and buy Korea today, like everybody's talking about Korea, after stocks have gone up
Correct.
8-9 times, you may probably lose money. So being mindful is aware. So I would rather choose a portfolio which is diversified and global. But practically in today's world, there are certain challenges because there is a certain limit
Mm.
of how much money mutual funds can invest globally,
Globally. Correct.
and those limits are right now full. So most global funds are
Not
not
taking
taking
in
your
my
money.
money. Yeah.
And then there is a third option. There is an option called liberalized remittance scheme where
Mm.
the government has enabled it for all of us who have global expenditure. A lot of us have aspirations to send our kids abroad for studies,
Yeah.
so you need to save for that and spend money. Or Indians are traveling abroad more often for holidays, so that is a spend.
Mm.
So all of this comes under liberalized remittance scheme. Investing globally also is a part of that. So on the Gift City platform, there are many funds which have been launched in recent times.
Correct.
Some of them have a $5,000 ticket size, so which is not very high.
Right.
And an average investor can start thinking about using that option as well. So these are the three broad options.
Everybody else is having a party. Why am I missing out?
Between 2000 to 2014, stock gives you returns. Or which is amongst the top 5 market cap companies today.
Right.
In its 30-year history, has had a
The Nifty and the Sensex are in record high.
The right question is not ki global ya India. The right question